if you're pension backed, you got to deliver returns, buddy.
Hello from the home studio where I am getting over that pre-Christmas cold. At the beginning of 2023, BetaKit sat down with OMERS Ventures managing partner Damian Steele about his bold vision for the pension-backed venture firm, which included a fifth fund and a unified global investment team. At the end of the year, well, things look a lot different. Steele is now gone, CEO of a portfolio company, Deep Sky, and OMERS Ventures has pulled out of the European market. US-based managing partner Michael Yang is now running the show, and those investment commitments we talked about, well, as Yang put it in his recent OV 3.0 post on LinkedIn, 2023 has been quiet. So, what is the plan for 2024? On this episode, Yang walks us through OMERS Ventures' investment focus, their target stage, and now 3 hubs in Toronto, SF, and New York. We also get into the changing market dynamics of this quiet 2023 and what it means that Canada's most prominent pension-backed VC firm is now being led for the first time by an American in America. It's a lot of ground to cover, and Michael seemed to be hedging his bets a little bit, but give the guy a break. He's only been running the show for a few months, and this has been one of the craziest periods in tech for some time. So what does OV 3.0 look like? Let's dig in. Startwell is Toronto's best place for innovators to create and collaborate. With studios, meeting rooms, and event venues you can book on demand. The vibe and amenities here make Startwell feel like a boutique hotel for company gatherings. It is comfy and fun. Of course, every gathering is also an opportunity to create content these days, and Startwell houses industry-leading media production studios, plus a team who produce professionally cinematic work like this podcast. Once a week, I cycle across town, braving traffic and the threat of being killed by numerous Uber drivers to find sanctuary here at Startwell. If you're looking for such a place in Toronto, I recommend you check it out. I'm appreciate you willing to take the time to have this conversation, because I think we're very interested in, I guess, the future of OMERS Ventures or what's next. And I know that earlier this year, maybe a month ago, you dropped like an OV 3.0 kind of, I don't know if it was like a manifesto or more just kind of like introducing you, reintroducing OV, talking all about that stuff. I want to maybe just jump in and save the 3.0 stuff for a minute and maybe just start with you in now taking this role, asking you how you would describe the changes that OMERS Ventures has gone through this year. Just what is your perspective on like how things have kind of shaken out, particularly in a year where like across the ecosystem, there's been a lot of, whether it's startups or funds or things like, I don't think anyone in January really called their shot and has executed, unless you're like Sam Altman.
Yeah. No, first, Douglas, thanks for having me. Thanks for having me on BetaKit. Big fan of what you guys do and how you service the ecosystem. So I'd say 2023 has been a year of change, a year of a lot of surprises. But then again, 2022 was, 2021 was, 2020. I don't feel like we've gotten a break and had like that new normal, whatever that may be, since maybe 2019 or something like that. And the way I would characterize it, as you get towards the year end, you start to reflect back on how the year played out. In one regard, with your comments on the state of venture and what firms around the world have gone through, the decision that we made in the middle of the summer that Damian Steele spearheaded, which was us pulling out of Europe and kind of really becoming centered and focused on North America, that probably makes a lot of sense and is in line with what many other venture funds are doing, whether they do it publicly, whether they're doing it privately, whether they're still yet to kind of unfold that card next year. But, the market is fundamentally different sitting here in 23 than it was over the last many years. And to kind of get to that new normal, you got to do things differently. You can't continue to do the same thing because the market's not the same. So I think that is not to be unexpected. If you were to take a step back, obviously none of us knew that when we started the year, and it was kind of a surprise as we start to kind of noodle and think about it. But I think the real surprise was more probably Damien making his decision to kind of pursue something that he had passion for, and kudos to him and Deep Sky and the journey that he's going to be on thereafter. So I think here at OMERS, the philosophy very much is next person up. And, it's such a tremendous platform and such a tremendous opportunity and privilege that you do the best that you can to kind of meet the challenge.
Yeah. I definitely want to dig into some of that, but I want to just one of the things that you touched upon, I want to swing back on and just double click on that a little bit because and I know it's important to acknowledge that this is a decision kind of made by your predecessor, who I guess was previously your boss and is now a portfolio company, which is an interesting turnabout towards the end of the year. But the market dynamics for leaving a market, I think I want to just maybe have you talk a little bit more about that, because I think broadly what we've seen is basically since Q1 of 2021 a real slowdown that is kind of carried through. Acknowledging that kind of division of OV was spun up during the peak period and now it's not. I guess I'm just wondering, maybe I'll counter propose this. It's my understanding now that given the state of the market that I guess the pricing on particular investments and maybe the valuations are a little bit more reasonable right now because of everything that has been experienced since. I'm wondering, given that, what leads to a decision to pull out of a market that was maybe, if not mistimed, the timing wasn't great generally, or circumstances changed to what you were speaking to, and not ride that out, given that most funds are looking to commit 5 to 10 years anyways. How can you would this be in a different set of circumstances a great opportunity for another pension back fund to be committing to Europe at this time now, or would I'm just really interested in how you're seeing those market dynamics and how it relates to how funds have to choose time in which they're committing and time in which they're not, which I think is going to be something that we dig into a lot in different ways here.
Yeah, I would answer it this way, which is every venture fund usually sits down with their LPs every year at an AGM and they talk strategy, right? It's what are we doing well at? What are we not doing so great at? Where do we want to continue to focus? Where do we not? What capabilities do we have to add? So on and so forth, right? Firms come in and go into markets, right? That could be geographic markets, that could be technology markets, that could be stage of investing, that could be personnel. Those are all the toggles and the levers that you as a GP have with which to kind of influence kind of strategy, so to speak. So I would put geography in the same basket of levers, no different than stage or sector or type of investing or anything else like that, right? And you owe it to yourself as a GP and also to your LPs to constantly revisit what the right strategy is. And that is dependent on kind of, your organization capabilities and strengths, the others in your ecosystem, and also kind of on a long-term basis, where you want to play and where you want to compete. I don't think most people kind of come in and out of things based off of what their perceived sense of what value or pricing is, right? You don't just jump into hey, we're going to now do ad tech investing because valuations and pricing are low, right?
Yeah.
That could be true, right? But do you just jump in and do that for a couple deals and then you jump back out? Venture, to your point, is long time constants. If this is public equities, you can kind of dial your strategies up and down very quickly. Hey, let's go long on this particular sector and let's go short on something else like that. But that's not this. So I think it was more of a longer term perspective on how are the next 5 years going to shape up? How are the next 10 years going to shape up? And the one thing I'll actually leave you with on Europe in particular, when Europe was originally kind of thought of and instantiated here at OMERS Ventures, it was actually meant to be a separate fund and a separate investment organization. So the
initially
notion
was, right? There was that
correct.
$750 million fund,
Correct.
I think, initially, and then
Correct. And then kind of, then the pandemic hits, and then what are you going to do, right? And then the shift to kind of being one global investment organization was kind of the play, and that actually makes a lot of sense because OMERS has a lot of success across all its asset classes on running on a truly global basis, whether North America, Europe, or Asia, and kind of running, in that style. But we got to change with the times and make new decisions.
Okay. I want to talk a little bit more about geography as it relates to like some stuff related to North America and that you had mentioned in the OV 3.0 document, which we'll definitely link to for our listeners, viewers to check out. But it just maybe going back, was there a sense, and knowing that you were in a different role at the time, when like OMERS had its AGM or annual team meeting, I guess maybe the end of last year, beginning of this year, that the European team was in trouble? Like, were there already conversations internally about that, or like did that come much more suddenly in the summer?
No, I mean, I think you must have sat down with Damien in Q1 of this year, had a great conversation about how the year looked. I think
it was actually December of last year before the holidays, and then we're like, it's the holidays. Maybe we should run this story in the new year when people are back. But yeah, I think I think it was actually right after. It was sometime after last year's OMERS charity poker event, and I think right after you had maybe been named the head of North America, or that decision had been communicated out, because I believe at last year's event the OMERS team was already referring to you as that, right? So I think it was basically the end of last year towards that time.
Yeah, I think you're right on that front. So I think we were optimistic. We were hopeful that 23 was going to start to kind of pull up from where 22 was going. And who would have thought that we'd start 23 right away with the banking crisis and a few other kind of black swans that hit us, right? So I don't think anything was forecasted, and I think we just had to kind of adapt on the fly. But no, for the record, our European team has been great. We've got a lot of awesome portfolio companies over there that we're just managing from afar, and we still have a couple colleagues and teammates from Europe that will be repatriating to North America, so they bring their entire portfolio with us. But
that's in the New York City office, correct?
Correct.
Okay.
Yeah, the funny thing is everyone in our New York City office speaks with a British accent now, including some from North America that we've kind of relocated to that office too.
Hey man, in markets like these, you got to really stand out in your value proposition and your offering, right? And if it's going to be accents, it's going to be accents. Okay. I want to dig into some like, we're already kind of maybe teasing some of the things that I want to get to in terms of like, OV really having a strong presence in New York City right now, and then all that stuff that's a little bit more North American centric. But it was interesting to me. I noted that in your 3.0 doc, and this is something that we should reinforce to people unfamiliar, that like OMERS Ventures is a pension-backed fund that you actually have the opportunity to speak to pensioners. This isn't the LP concept isn't some sort of vague faceless group for you. It's like literally Canadian pensioners, right? And that has an impact on the perspective, the approach of the fund. Like, it's a tangible reality for the OV team. I'm wondering, like, how is this current market environment different for a pension-backed fund, and particularly a Canadian pension-backed fund? Like, how would you draw a distinction between those funds and, whether it's a family office or some other, non-pension-backed institutional?
Yeah, so I'm going to answer that, but I'm going to talk about my personal journey first, because I think it's emblematic of how people would perceive OMERS Ventures and all that. So this is the third venture organization that I've had the privilege to be a part of. The first one was Atlas Venture, And that was a transatlantic fund kind of in the heyday right after the dot-com kind of era. 6 offices, North America and Europe, standard issue LPs, family offices, endowments, pension funds, the standard. My second fund, Comcast Ventures, was a single LP corporate vehicle. So, CVC in one regard, but very specifically focused on financial return with strategic import as a secondary factor. It was actually there that I had the opportunity to cross paths with OMERS. Wasn't familiar with the Maple 8 until I invested in a Montreal VR studio, and all of a sudden I had 2 out of the 8 kind of on the cap table, and that's where I met Damien, and the rest is history, as they say. But when I got asked to kind of come aboard OMERS Ventures in 19 and open this office down here in the Bay Area and kind of drive at the U.S. market. That's an opportunity you can't pass up. And then to have kind of what I would call pristine world-class capital behind you, which is the Canadian pension industrial complex, like that is known worldwide for being kind of leaders, professional, ethical, high integrity, all like good investors, all the things that you would want to. And OMERS is further differentiated because we're all direct for practical purposes, right? Many other pensions are still kind of indirect and kind of going through third-party managers, but that strategy shift had kind of changed many years ago. So, I'm walking around here trying to explain who we are. The name is not as well known out here in the Valley because there just was no footprint or presence before. And we get to basically tell our story. And when you tell that story, it resonates with founders and co-investors and the like, right? In a time now where capital is global, right? Could come from Asia, could come from Middle East, could come from Europe, could come from North America. I think the Canadian pension complex really stands heads and shoulders above. And then when you couple it as each individual employee that onboards into OMERS Ventures has the opportunity through our offsites or other kind of activities when we come up to OMERS to sit across from somebody like you, if, for instance, you were a pensioner, or we see kind of videos or other kinds of things, like that just brings it to a whole new level, right? I'm not writing this check or busting my butt kind of working in a board meeting for a founder just because it's going to benefit a high net worth person or, a corporation or something else like that. That's next level. And we do tell our founders that, right? Like when a founder is not doing well or they're not performing up to standards, I've had many of them tell us like, hey, I'm not sure where this is going to go. And I apologize. I apologize to you, but more importantly, I apologize to your pensioners. That's real impact.
Okay. So would you say it's more of the value proposition is slightly different than maybe like the actual operational considerations? Would you say that there's you had mentioned like the corporate strategics, like that, the return focus, but then also because there's a strategic focus, maybe a little bit more limited on types of deals and things like that. Would you like, I think maybe the assumption would be that a Canadian backed pension fund, across a variety of types of investments would be a little bit maybe more risk adverse in there. Like, does it actually dictate how you allocate capital any differently, or is it more the brand?
It has nothing to do with operationals or kind of our strategy. If anything, it's a feather in our cap when you talk to kind of, in particular here in the States, as I've come across serial entrepreneurs who've raised money multiple times for different venture funds, and they're sophisticated enough to ask, who are your LPs? If I hit it, who am I benefiting for, right? Is this for Stanford? Is this for a union? Is this for a bunch of folks who have mega yachts already? Is this for some dark money that I don't know where it goes to? Like that's where it really is a point of differentiation. But it never really comes up in the context on investment strategy or operating cadence or rhythm or anything like that, because that's completely governed by us here within OMERS Ventures.
Okay. I'm gonna like just for a little bit at least just refer back to your writing of the 3.0 plan and maybe kind of like go through the specific things here. So if people who have seen the article before being like he's he's just going through what Michael wrote. It's like, yes, intentionally, so we can talk about it, guys. You had noted that OV was stood up in 2011 under a different pretext and at a completely different market environment. I think we totally, I don't think we have to say anything about the different market environment. I think that's even if people who weren't in this space in 2011 will assume that right now is not like then for 5 different reasons. But talk to me about the different pretexts, because again, this is where I was trying to connect my understanding of what OMERS Ventures means, where it's positioned relative to OMERS more broadly, and then the North American market there. What was that pretext you were referring to?
I mean, I think it's pretty innovative and progressive that a pension plan launched a direct investment vehicle in the venture asset class back in 2011, right? And then went out and recruited a team to basically stand it up on its own. So I think that's pretty remarkable from everything I've heard about other Canadian pensions, kind of circa early 2010s.
It's interesting because we just did a podcast a few weeks ago that we will link to, or if it's on YouTube, I'm sure a floating box will pop up right at this moment for you to click on it, with Matt Roberts, formerly of BDC and Scale Up, and now doing his own thing at CMD. And he was actually talking with the last 25-year history of the market, and actually noted that the Ontario teachers and CPP had actually been a little bit earlier to this space and this approach compared to OMERS, but were so early that they were an ice age before and had like the dinosaurs been hit by a comet. So there has been this weird wax and wane of Canadian pension funds, maybe in their commitment to the venture component and the direct investing component. So I was just wondering there, what that was. Do you how does that pretext kind of sit now relative to the market, do you think?
Yeah, so I wasn't there. I'm not proficient enough as a student of the game on this front. But what I've been told,
and I'm not trying to get you in some weird Canadiana trivia that only 5 people here know.
But what I understand is maybe other pensions had exposure to the venture asset class prior to kind of the 2010s, but OMERS didn't. But when OMERS decided to seek exposure to it, it stood up its own thing. It rolled its own, right? Which I think is really how you kind of leapfrog, quote unquote, the competition, if they think of themselves as competition. And also from what I understand, still sitting here in 2023, so 12 years later, none of the other pensions have a direct early stage venture kind of team. Maybe some have stood up crossover teams or growth teams on a direct basis, but their venture or early stage access is still fund of funds kind of fundamentally as a strategy.
Okay. Well, let's talk about maybe the focus of those direct investments, because again, I think you're talking early stage. It's not, for maybe listeners or watchers here, to define our term, it's early stage in the slightly later than what now constitutes the early stage of the pre-seed, all that stuff. You guys are doing basically 1 million ARR and beyond. So, which I would assume for a pension-backed fund makes sense for you guys to really start applying scale to scaling companies, right? You're trying to get them at A and take them all the way to either the D round, the IPO, or the major exit, right? Is that's still the general kind of I guess stage approach there?
Yeah, and what you're right. I think what we did this summer was we kind of went and back tested a lot of the prior checks that we've done to see when have we found success, or the attributes and characteristics of the business at the time. During the run up in the most recent years, I'm not going to lie, we did pre-seed, we did seed, we did incubations. We also did we've also done late stage stuff. I think even some people on the growth equity team was super early into some companies here. Yeah, it was everyone was t-shirt cannoning capital into the market. You just had to figure out how to continue to stay active and participate in that markup, right? In that market when things were just kind of ballooning a little bit out of crazy. But now that things have kind of rationalized out a little bit, we just said, hey, where have we found more success? What are the players around the table here at OMERS Ventures most comfortable with? And what's the pattern recognition we are most familiar with? And it's just like, hey, if you as a founding team are just about to hit that 1 million ARR or at that or just past it, like that's green light go. We're really good at that and beyond. Like if you're at like 50K, are we? I don't know. Like it probably feels like there's a lot of other great investors in the ecosystem that can carry the water there and work with you. And I think the other thing that has happened is our portfolio has ballooned to over 70 companies, right? So, can you continue to care and feed companies at certain stages that need a lot of handholding, or do you just kind of meter out your time allocation a little bit more efficiently?
Yeah,
where you
I'm
can be more
assuming
impactful.
One of the backings here is that you are your own follow-on, or you're less worried about that component than the the $10 million X high net worth individual fund that's just stood up for the first time, trying to make sure that their portfolio navigates to the next investment. Like and we'll get to it in more detail, but like the pension back funds aren't necessarily worrying about that capacity to carry through successful companies, right?
That's not how we think about it. I think the way we think about it is you want to align yourself with founders and businesses that are scaling the way the best venture scale businesses do, right? So it's part and parcel about who the backers are, whether it's not because we're pension back we have a certain MO or thesis or strategy behind it. It's just like, if anything, it's just like, if you're pension backed, you got to deliver returns, buddy, right?
Yeah.
And you got to deliver it to like real people. So we can't afford to kind of plow money into things that don't have the potential to be venture scalable businesses. And the best way if you're on the right track is if downstream from an OMERS Ventures check is a bunch of other high quality VCs that come in, right? So this is not about us at OMERS becoming selfish or sharp elbowed and just saying, hey,
soul sourcing, yeah.
Right. You've got a great fund, but we're not going to let you in because like we want to hog all in the ownership. We're going to be like, hey, if you're a value added investor that has a lot of success and has seen these scenarios, like we want you on the cap table. And if we're not investing in the right stuff that would get you attracted, then we got work to do on our end. Right. So we think as much about what comes before us as equally as what we do downstream for us, because we're never the last check. Given, your original pretext of this question is where do we participate? Series A, Series B, Series C. So by default, that means all the growth investors come after us, Yeah. And if we're not investing in good stuff, they're not going to be there. They're going to pass on our deals.
Yeah. Okay. I want to start tying this to maybe some of the sectors that you focus on, which you laid out in your post, but I'll do it in the context of this follow up to what you're saying, because that stage that you're talking about has the greatest opportunity return for a fund. But it also right now in this environment means that there are a lot of companies really struggling to get to that stage, particularly in like a B2B SaaS environment, which we'll talk about that you play in, because their customer base has just been chopped, especially if that customer base included other startups. Or there are those companies that are maybe slightly beyond that who are dealing with a messy cap table, messy valuation. It's not an easy pathway. I know talking to some people on your team last week, it's like there are a lot of really great SaaS companies right now that are viable businesses having a real hard time getting an offer relative to insert AI company X, right? I'm wondering how you see the opportunity in that, or maybe how you navigate that mess. Given that, at least maybe you can talk to me about the Canadian versus the U.S. market. At least in the Canadian market, it's pretty choppy right now.
It's pretty choppy everywhere. So I don't think that's unique to Canada. And let me just kind of quickly recap where we are really setting our sights and focusing our time. We've primarily B2B software. Okay. The four quadrants are horizontal SaaS, which is what we call, software for the enterprise and the departments and the business units and the divisions within that: sales, marketing, HR, office of the CFO, so on and so forth. That's bucket number one. Bucket number two is vertical SaaS, right? So this is software that's very specific to an industry and how that industry operates. And if anything, this is where OMERS Ventures has had the greatest success kind of over our history, right? Like, we've made a bed in vertical SaaS and we want to continue to kind of lie in it. The third one is fintech. And this doesn't necessarily mean the fintech of the ZERP era, right? Where there was just abundant kind of balance sheets and warehouse facilities and all that kind of stuff. This is actually software that sells into that or enables kind of the innovation that's happening throughout that industry. Anywhere money's moving, there's data moving alongside of it. Like, we're interested in those kinds of things. And then AI is obviously the fourth bucket. You can't be a VC in the market right now and not have a practice and some people that are gurus on that part. How we came to those four areas is a reflection of the times right now and what we think the next several years are. Because what you can ask me is like, hey, where's all that deep tech focus that you guys used to do, right? And what I've kind of told our team is like, we're doing an 80-20 split. 80% of your personal time is in those four centers of excellence that I just mentioned. 20% of it is still opportunistic stuff: personal passions, side hustles, new spaces that we don't even know are in front of us. Like, we still got to be on the forefront of catching all that, because that might be the future set of rotational areas that we kind of go into. Okay. So that's how we kind of laid it out. I think in times like this, when you peel back the numbers, B2B SaaS is the bedrock of venture capital kind of returns, right? So what rings the bell for LPs, makes them happy, continues that to kind of enable them to invest in the business. It is a lot of this stuff, right? Yes, consumer has whales, right? Like, the true power laws come when you hit a Facebook or something else like that, but they come and go. It's lightning in a bottle. It's hard to programmatically pick all that stuff. And sometimes you got to be honest with yourselves in the mirror. Like, are we the best people on the planet to basically pick those opportunities? And deep tech is better served in some capital markets environments and less so in others. We will always have a sprinkling of all those things, right? So this does not mean, hey, we at OMERS Ventures don't take pitches outside of B2B software. Full stop. That is incorrect. We are willing to take pitches in everything. And like, every investor has multiple disciplines that they're interested in, but at the same time, I equate it back to like going to university. What's your major, right? You got to knock out your major in order to graduate. And then if you got a few minors around the side, have at it, right? That's personal passage and interest.
In today's digital world, cybersecurity is paramount, and that's where Cisco Firewalls can come to your rescue. Cisco Firewalls offers tailor-made security solutions for Canadian businesses, safeguarding your network, data, and customer information from cyber threats, bringing you the peace of mind that you deserve. Packed with advanced features like intrusion detection and prevention, application layer filtering, and stateful inspection, Cisco Firewall is your fortress against ever-evolving cyber attacks. When it comes to security, do not compromise. Secure your business's future with Cisco Firewall. Visit the Cisco link in the show notes or give them a call today to dive deeper into the world of cybersecurity. Stay Cisco secure, Canada. Hey listeners, did you know that you can revolutionize your customer experience with AI? Ada is an AI-powered customer service automation platform on a mission to make customer service extraordinary for everyone. Since 2016, Ada has powered more than 4 billion automated customer interactions for brands like Meta, Verizon, Yeti, Wealthsimple, and Square. Get AI-first customer service that meets customers where they are, in their language, whenever they need help. Ada makes it easy for businesses to automatically resolve the greatest number of customer service conversations across channels and languages with the least amount of effort. For more information, you have to visit www.ada.com. ada.cx. That's ada.cx. Okay. I want to dig into the verticals a little bit more. I think it's obviously, taken as granted that like B2B SaaS is as Canadian as hockey, but I even just more following up of take any company in any one of those sectors at this current stage right now. They're all, I think, based upon what you're saying, kind of dealing with either a desperate need for bridge capital or a customer base that is not as spend happy as it was 6, 12, 18 months ago. Are you weeding through the companies in terms of finding one that have greater default survivability, or are you actually looking for companies that are totally fine, irrespective of the fact that they just had capital at a wrong time, and if you can enforce a little bit of structure on their cap table, this is actually a great deal for you? Or like, I just wanted to maybe just see, separate from the vertical, if there's anything in terms of the art of the deal that you're looking to do to find new portfolio companies.
Yeah. So let's maybe give your listeners some examples, some illustrative examples to kind of really highlight this stuff. So let's say you're a B2B software company, you raised pre-seed seed, right? To get to an A, maybe in a bygone era, you could have had 500K of ARR, 750K of ARR, maybe $1 million of ARR, but those goalposts have moved out, right? Which is why they're in the situation that you're talking to. Our view would be, that's on your seed and pre-seed investors to kind of get you like further along on the field to kind of where the new goalposts are that a Series A firm would kind of look at, right? And if you can't get there, you're probably not going to be here in the market much longer. And that's part of the whole creative destruction process where companies come and go. And there's nothing wrong with that. Maybe it was wrong time, wrong place. Maybe it was the product didn't add enough value or ROI in this market.
Judgment, tons of things. Maybe your bank imploded in the spring.
And in all honesty, I think one thing that needs to happen more is that investors need to give founders permission to just shut it down, right? Like it's opportunity cost on them as founders grinding it out, and also on the investors. And sometimes it's just not meant to go because, again, venture's the business of chasing the high flyers, to kind of backing the ones that have kind of power law, escape velocity opportunities. And if you're not, you're kind of in this space where the growth isn't there, or there's too much churn or something else like that. It's you got to find an alternative strategy. Okay. So that's one.
You're
one
not
bucket.
Necessarily like picking through the current
no
lost children
because
of venture right now.
We would have either passed early, declined the meeting, or it just wouldn't have kind of hit the specs that we look to underwrite. The flip side is maybe it is an interesting business. It's been growing like a weed. If anything, the board kind of got over their skis with management in terms of pushing too hard on sales and marketing. So they're burning too hot, right? They raised too much money. The valuation is off kilter, so the multiples don't kind of work. But that is still fundamentally a sound product with happy customers that are retaining, that are expanding, that aren't churning, that have high NPS, that are their users are using it. There's nothing wrong with that other than price and value, right? And they deserve to live. They deserve to get more capital, but that capital's got to be ratcheted back to kind of the new normal, right? If your best cloud software companies have compressed on the multiple fronts significantly over the last year, you can't expect the private ones to behave significantly differently. So are you seeing
a lot of structure, a lot of pay to play? Are you enforcing that?
So I would say the best in class companies are simply recapping themselves. So they're not applying structure, right? I think you've had other experts and other VCs have told you, like, don't do the structure, don't perpetuate kind of a bad capital table and all that kind of stuff. I think that is the right advice. Just recalibrate it. Start from scratch, if necessary. And this is something we are absolutely willing to do. So one of our investments earlier this year, was pretty much this. It was a Series C opportunity, but we kind of right-sized it to kind of line up with the ARR and the maturation of the business and kind of the evolution. And then away we all went. But that takes big boys and girls around the table, both in management and board and existing investors, to kind of agree on that, to let it happen, and then to be okay with it, right? So we are comfortable doing that. And we will continue to look for those opportunities.
Okay. Is there any concern at all? Like there was a BDC report that came out about a month ago. We're going to be talking about it on a future episode and in a variety of formats on BetaKit, talking about just there's actually been a depression in entrepreneurship over the last 10 years. And I think across North America, we're seeing like a similar function here of just like, I don't know if it's we're going to explore it, but whether it's a less willingness to start new companies or less of a facility to do that. Are you worried that you are picking a stage right now that it's a little bit harder to find companies or deals or opportunities at? Like, do you expect that to continue mid to long term?
So when you said depression, I didn't know if you're going mental behavioral health and emotional well-being or not.
There's 100% that but I think a depression in the number of people that are becoming entrepreneurs and new co's being spun up. And I would say, for our listeners, refer back to in the stage prior to the one that OMERS Ventures plays at, there's been a lot of consternation about just a lack of capital to lead those pre-seed or seed deals to then get to the A stage. For a variety of institutional macroeconomic reasons. Knowing that this is a moment, and we started this conversation talking about long-term 5 to 10 year timelines and having to make tough choices. What's instilling the confidence that this stage is the one that will is the viable top of funnel for OMERS Ventures?
So we're not seeing that slowdown in supply, right? Or pre-seed, seed stage companies coming to us. If anything, I worry, and that's why we kind of tightened the surface area that we're going after, is that there's still too much for us to basically look at, and you're just drowning in introductions and meetings and all that kind of stuff. I think what we need to continue to work on as every venture fund is not volume, but quality, right? Not quantity, but quality. Are we really looking at the best ones, because we know the best ones are the ones that are going to generate the returns. And I feel like right now, at least the stages that we can address in A or B or C, you could argue there's a dearth in some of that too, right? Like there's all these seed stage companies and pre-seed ones that got propagated over the last little bit. Who are they going to go to, if they have kind of met some of the benchmarks, whether efficiently or inefficiently? So I'm not worried about supply or quantity at all. I'm worried about quality.
Okay, cool. Super cool. Then let's talk a little bit more about these the vertical focuses or the I guess the sector focuses. I don't want to talk about we're not going to talk about SaaS at all, because Canadian Tech Podcast talking about B2B SaaS, we might as well be singing the national anthem. Like it's like taken for granted. And I'll get to the fintech stuff in a minute. I want to double click on something you said about AI, where it's like it's effectively impossible for anyone with capital to deploy. It's interesting that we're doing this on like the first OpenAI developer day, and I'm sure they announced something that will eliminate both of our jobs in like 6 weeks. To not be paying attention to AI. I'm interested though, like how that flies with like the responsibility of a pension-backed fund, given that this is like super nascent, completely. If not, it's not hard tech, but it's definitely frontier tech in some instances. And, maybe I'll draw a point of comparison with like crypto. To my off the cuff knowledge, and I might be completely wrong about this, but my brain is telling me that I'm right. OMERS Ventures did not, and I think OMERS generally did not go super heavily into crypto. A lot of other funds went super heavily into this, including some Canadian pension funds, and to their great dismay and detriment. And I'm assuming some of that just comes from, again, that pensioner responsibility diversified portfolio, everything that OMERS does. How do you balance that versus, hey, everybody, this is just a thing that we is the future. We don't know what that future looks like, and we have to be playing in that space. How do you reconcile that with the horizontal and vertical B2B SaaS that is like a metronome in terms of like Canadian tech?
Yeah. So let me just kind of respin something you said. That doesn't come from being affiliated with a pension. That comes exclusively from who are the seats around the table, what experiences did they have prior to joining OMERS, and what knowledge have they accumulated, right? And you could take AI.
So this is a Laura Lenz thing, then, is what you're saying.
You could take AI and it's a big phrase. It's a big term, right? But what is it underneath? If you don't have people that are studying it judiciously, meeting with hundreds upon hundreds of companies that claim to be AI, you're not going to figure out where the investment opportunities are, right? Like, I don't think OMERS Ventures has ever chased logos or opportunities or anything like that. It's always been very fundamental kind of bottoms up investing. And right now, a lot of the AI stuff that we are looking at are really the bridge or the intersection between AI and vertical SaaS, AI and horizontal SaaS, AI
so like
and
a
fintech.
Wabi, for example.
Right. And they are really kind of, that's where we bring the power of like a good chunk of the investment team, because there's expertise from two different angles to bear, right? So it's why you haven't seen us chase a Gen AI, like, hey, let's make Douglas look like this tomorrow, or an LLM only model or something else like that, right? We're trying to find where the use cases and the applications and the enablement of AI applies. I think the other thing that's super, kind of worth commenting is, a good chunk of our portfolio today, when we previously invested in them, they weren't AI companies, but they're all got product and technology initiatives that one could characterize as like AI kind of work streams, right? So we are also kind of being informed, but by what our existing kind of investments and portfolio companies are dictating to us. So again, it's not some tops-down OMERS oriented kind of perspective. If anything, they're asking us, like, help us, with our other asset classes and our other assets. Like, how should we be thinking about this? And we're perfectly suited to kind of provide some input on some of that stuff by virtue of where we play.
Okay. I want to talk about fintech a little bit, but I'm going to do it in relation to some of the other stuff that you wrote about in the 3.0 document. And I'm going to maybe lay out a couple of things that I hopefully tie together and then see how you engage with it. Because, as you know, you're OMERS Ventures' third year. You were hired by its first. I'm very much interested in what it means that OMERS Ventures is now like a Canadian pension funds venture arm is now led by someone out of the Valley. Knowing that you've been the North American lead for a while, but I think it's very different when there's not that level of global lead or whatever above you. And you had said something interesting, that today's OMERS Venture is geographic agnostic, which I think is interesting, not only in relation to what we were talking about the just removing the team from the European market, but then also what's going on in New York. Not only bringing people there, you have I think teased that you might be moving some more people there. I wanted to ask about that. But then you also in the fintech, you noted that like AI is really happening in Toronto. Fintech is kind of to come out of the New York office, which implies to me that it's the Toronto team isn't really looking at Canadian fintech options here. Maybe you're much less interested in Canadian fintech companies who don't ever leave the Canadian market or rarely do, and usually claw their way back to it after an unsuccessful international expansion. Talk to me about what it means to be geographic agnostic for a Canadian-based fund that has expanded globally, is now being led out of the Valley with, I believe, still a unified investment committee, and now a heavy emphasis on a New York market. Like, there's just a lot of geography happening here, and I don't know what agnostic means relative to what you're talking to. So I want to give you the opportunity to unpack that.
Yeah. I think from your perspective on the outside looking in, it probably looks fairly dramatic. I think from the inside operating, for us, it's neither here nor there, meaning we're kind of working in this vein already. So here's what I'd say. The first day I join, or soon thereafter, I'm asked to pick up 2 Canadian portfolio company boards, Felix and Paul Studios and Wattpad, right? And it was based on like, hey, you're Wattpad because you've done a lot of digital media, basically where you came from. You're the best guy to kind of pick that up. The gentleman who sits right next to me, he comes from CRM and horizontal SaaS. He's asked to pick up Clue, right? And Jason. That makes a lot of sense, right? So even from the get-go, we were kind of going back and forth across the border. So none of the US, quote unquote, Americans ever thought of themselves as only focusing on this. It was like you already were in the ecosystem. Maybe we weren't loud and proud about it because, we had our colleagues in Toronto that were really the main show, so to speak. But in terms of like, at least, you've never had a chance to meet all the team down here. It's always kind of how we've thought, kind of like the border doesn't really go there. It's based off of expertise and what we know, right? As individuals. Yeah.
I didn't really necessarily mean between the Canada and the U.S. border, because I think it's worth noting to our audience, because you've been head of North America since 2022, right? Like, so that blend of the North American team across the border has been something that's been going on for a while. And I hear the same thing from your colleagues, that it's like, this is actually, we were kind of already doing this. But I'm wondering how that relates to, when you say geographic agnostic, do you mean within a North American context?
Yes.
Are you guys still looking at deals outside of North America?
No.
What's the value of a New York office in relation to that? Is some of that just ease of managing the European portfolio? Because that's like, just in terms of like the Atlantic situation, that's as close as you'll get. Like it was more clicking on that in relation to some of the global opportunities you're talking about, but like within a North American fence.
All of that. You're right on all of that. Okay. So, over the last four years, we've started to populate a bunch of investments and portfolio companies in New York. So people from all over the place were already traveling there organically, right? Because we've got a half a dozen companies that were there, yet we had no office. Now, interestingly, to your prior question, the head of private markets or private equity sits in New York for OMERS. The head of infrastructure sits in New York for OMERS. The prior head of real estate sits in New York for OMERS, right? So it is very, and today the chief investment officer of OMERS sits outside of Canada. So like that is kind of where it is either going or is already happening. So I don't think and I'm putting words in OMERS' perspective, having a head of the venture kind of program sit in the Valley seems to be reasonable. Like if they sat in North Dakota, you'd probably scratch their head and be like, hey, why? Right. So I think geography is just not a thing. I think what we're really saying is the major technology hubs where you can find these outsized opportunities and these tremendous teams pursuing great markets, they sit in Toronto, they sit in New York, and they sit in the Bay Area. Full stop. I don't think people can generally disagree, with you if you just look at the sheer data and the numbers over the years. And I think what we're saying is we're going to bet into that. We're going to bet into that for the long term, and we're going to just have foundational kind of teams there. What we don't want to have happen is you only know New York, right? Great. You got the 5 boroughs covered. You're not really helping me out on that front. Right. And the other thing is, as we've seen through the pandemic, talent is liquid. It moves wherever it's going to move. Right. And we're going to go to those places wherever they are. And we're used to kind of investing in kind of hybrid kind of teams. There's 2 people in New York that really love AI. So they know they're going to be schlepping up to Toronto a lot. They're going to be schlepping to Montreal a lot. They're going to be crossing country to San Francisco a lot.
It's a 45-minute Porter flight. You're fine.
Right. Yeah. If you
fly out of Jersey, but
you're right. But they're on planes, right? And that's the nature of the job. If you're the fintech team, they're coming to San Francisco. They're looking in Toronto. They're going to New York. It's just the nature of the job. And to do anything but that is just suboptimal, right? Okay. It's not the way you should practice the art of the business anymore.
Yeah, I think that tracks with like prior prior OMERS Ventures commitments generally with the kind of unified investment committee, but then also just what we're seeing in just the way people work over the last couple of years. Do you expect, though, with this across OMERS broadly, a gravity well happening in New York, that we should be expecting OMERS Ventures hires from SF or Toronto to start migrating to New York, or are you going to add fresh people to that office?
We're going to crawl, walk, run, right? So the crawling is first. Some of our London colleagues repatriating to kind of New York as they kind of get their personal affairs in order. We've got one person from San Francisco that's already relocated to New York, just kind of dovetailed nicely with personal reasons. So she's there on the ground. And I think over time, if there's others, we're going to be fully supportive of it because,
okay, because you kind of teased that in the article. You were like, you might see some more people. So I would assume that there's been some HR requests made internally, right?
I think we're looking at the opportunities and like, what do we need, right? Toronto and the Bay Area will still have more investment headcount than New York. So this is not a story of, hey, we're all moving to New York kind of thing.
Okay. I think maybe the final question that I have for you related to this is just actually, it's kind of a bookend, but it's important, right? Because you're a venture fund and my audience wants to know about this stuff. When we ran our story in January, or let's say this time last year, the plan for 2023 was a fifth fund deploying $200 to $300 million per year. Now that's obviously across a much broader geography. That was the public commitment as recent as August 8th. And then by the end of August, those plans had changed in line with the change in market dynamics. I'm wondering where OMERS Ventures is now in terms of capital commitments. I think you've communicated on this a little bit, and in the 3.0 article, maybe and your other publications that OV has spoken to. Not maybe a wait and see, but like a slowdown a bit to evaluate the market. I guess I'm giving you the opportunity now to maybe set some different criteria going forward that founders looking to find capital through OV might be paying attention to.
Yeah. We have reset probably earlier than kind of the dates you have in mind, just because we're watching kind of deal flow in the market. I think
I'm only talking about what was publicly communicated. As of August 8th, we were told from OMERS Ventures that you guys were still on pace for $200 to $300 million per year. Now, knowing that was being pushed back probably a little bit just because of what did happen, SVB and all those other things, but that was at least what was publicly being communicated, right?
Yeah, I don't know about that, but there would have been no way we could have come close to some of those those figures sitting in kind of Q3. We've continued to ratchet back in 23 versus 22. That is not anything to do with capital availability. That's 100% related to kind of our buy box and quality, right? We're seeing as much quantity as we could have expected, but the quality isn't really there. And let's just unpack that for a second, right? If you go back to 21 and people start realizing like, ooh, the world's kind of changed. Maybe you still got one big round that you're able to pull in. You go into 22. Ooh, we've got a recession. Ooh, interest rates are starting to skyrocket. We're starting to do RIFs and all that kind of stuff. Those companies could easily do enough preventative measures to get through the balance of 22, all of 23, and into 24, right? It was the weaker ones, or the ones that just got the timing a little bit off, that weren't going to make it, and they would be in market predominantly in 23.
Or who timed it for the worst possible time, right? Who were like,
right.
Yeah.
It's neither here nor there. We're not saying it was their fault or anything else like that. But then you look at the KPIs, the metrics, the opportunity, the execution, and you're just like, yeah, these are probably not the deals that I want to basically do, right? I know there are better ones coming ahead in 24. So most VCs have told their companies in 23, do not raise if you don't need to, right? If we can raise more debt, do a bridge round, cut more costs, whatever, maintain stasis, just get to 24, get to 25. So that's why we're not writing as many checks as we would like. You know, it's the sad state of affairs because it's more about quality, has nothing to do with capital availability. Our capital availability has kind of been frozen because we're not able to kind of deploy it. We've even told our portfolio companies don't raise this year. So even our follow-on activity has really plummeted because our companies are doing the right stuff and getting into kind of the out years. Yeah. So right now, all the entire focus of OMERS Ventures is like we're aligned on what we're going after. We have ammunition behind us if we want to kind of use it, but let's really be focused on what great is, not good enough. We shouldn't settle for good enough. We should really shoot for great and let's go after it, you know? And if you've got to do some of that restructuring, but you really know it's great underneath, have at it, you know, kind of thing. So it doesn't need to always be served up on a silver platter for us. So that's why we feel pretty good.
I guess part of the reason why I'm asking is that it's again a little bit different for you guys, where it's like most founders, like advice other VCs give to founders is like, pay attention to like what life cycle or stage a fund is in, so whether or not they should be a target. Because if they're a more mature fund and their reserve capital is just for follow on in their portfolio, they're not someone that you should be pitching for net new and things like that. And obviously with OMERS, like you guys are just like, I'm sure there's just a button you press internally at OMERS and then more capital comes through the great machinery.
I wish. No. I mean, it is a fund, right? With other LPs, so we can't just do whatever we want to do, right? It's in consultation, and we've kept all of our LPs, including OMERS, abreast of like how things are pacing. And I think they're fine with it, right? Because as you've also heard, it's the GPs that keep going back to their LPs and saying, hey, another capital call, and hey, we're ready to raise the next fund. That's not the temperament that LPs are going for right now in circa 23.
I understand. I guess I'm wondering what do you want to be communicating to the market right now about OV's level of capital or willingness to commit so that they can kind of understand you? Because I think, you know, I take it as really, really well intentioned that a lot of this 3.0 document was to kind of like reintroduce, set the criteria and things like that. And for whatever reasons that you're not deploying at this point, I get that. I'm just wondering if there's, you know, we've in times past seen announcements related to giving people kind of guidelines towards that. And I'm wondering if that's not something that you're looking to do right now, is that something that we should be expecting in the future relative to what the fund size is, what the stage of deployment is? Well, you know, are you going to have a 2024 update or just things like that?
No, that's fair. So it's none of that. We put out a term sheet 2 weeks ago and we got smoked on valuation. Okay. So we're trying. This is not because of anything we're doing. We in horizontal SaaS, vertical SaaS, fintech, AI, there's a buy box. We know what we're looking for. If you kind of can enter it and if you've got the right ingredients, we're going to hit the bid. We're going to put a term sheet on it after doing all the work and all that kind of stuff. Mm-hmm. But we know kind of like how we should view you intrinsically from a valuation perspective. And if you can find a better offer and you're going to go do that, then there's nothing we can do about that, right? There's still some craziness and zaniness in the market, unfortunately. Yeah. Yes. And you know, this particular business I'm referencing was AI meets a vertical SaaS, right? A particularly industry vertical that we knew. It was a business that had passed the 1 million ARR perspective. We're looking at a Series A opportunity, right? We're happy to lead it. We had a co-investor we brought to the table that was a strategic. So we had a fully locked syndicate. And then if somebody else wants to outgun us by 33%, what are we supposed to do? We're not going to write that check. Okay. So I can tell you tales of this all year long. Right. And
post Tiger Global, no one wants to do that ever again. Right.
Right. Yeah. So that's the reason. And what I would say to your listeners and to the founders out there is come have a conversation with us. The team is going to be very, very good at giving you feedback of, hey, I'm a seed stage, close to an A vertical SaaS company. Okay, great. Talk to our team there. They'll tell you what you need to get to, what you like, what we don't like. Okay. If it's a fintech business that thinks it's a Series B, same thing. Have a conversation. We'll tell you, like, we know this stuff, and maybe we should do a better job of expressing it. But we're open for business. We're always open to kind of have conversations and give feedback. And it's not always, you're not going to always have the right metrics and the right kind of vision, the right trajectory you're looking for. But doesn't mean we're not going to chat. Like, and again,
Yeah.
I think the benefit of us being thoroughly North American without a border is, like, we can give you a broader market perspective. We're not going to give you an East Coast one. We're not going to give you a West Coast one. We're not going to give you a Canadian one or US one. We're just going to tell you the totality of all the data that flows across our systems. This is what we're seeing. This is what we're hearing. And this is our perspective. We're data point of one. So take with it what you would like,
Yeah. Okay, that's really awesome, and I think towards my intentions of having you on to really get to know you a bit better and give the opportunity to kind of speak to what OV is going to be going forward. I think that's probably maybe the best place to end it, man. I know also we've gone a little bit longer than we were scheduled, so I really appreciate you sticking around. And I gotta say, I thoroughly demand that you are in attendance for the next charity poker event, or you just invite us all down to either New York or SF.
We could do that. Maybe we need to take it on the road. But I was, for the record, at the poker event last year. I just couldn't get up there this year because of other commitments.
Hey man, no, it's for charity. So if somehow I can convince you guys to do multiple events in different geographies, it's a win for everybody, man. Michael, thanks so much for doing this. Really appreciate it.
No, appreciate it. Thanks for having me on. It's long overdue, and welcome the opportunity to come back at some point too.
Awesome.